JSE is firm along with its global peers as investors await the U.S. inflation report due later in the day, which will likely set the tone for the last Federal Reserve meeting of 2023. Petri Redelinghuys is the trader and founder at Herenya Capital Advisors, and he joins us now to take a look at the latest market moves. Thank you very much, Petri, for your time this afternoon. How are we looking at midday trade?
It's a pleasure. Thank you for having me. So it was going all right this morning. It's kind of faded into the afternoon. If I'm not mistaken, the market has gone red. So let me just quickly have a look here to get the latest numbers for you. So we were up as much as almost 80 basis points, or 0.8%, sort of in the early morning session. And currently we're looking at a market that is down by 0.6%. We'll call it 2/3%, red at the moment. So that's quite a big swing in a reverse of fortune. So I think that there's quite a bit of fear, as you mentioned. Later today we've got some inflation data coming from the US. I think there's quite a little bit of careful footing around that. I'm not sure if I'd call it full-blown fear just yet, but we have seen the market pull back quite significantly over the last few days. The US market has bucked the trend and has traded much higher. Our market has been quite weak. So it's interesting to see that even though we started off quite strong, the weakness sort of comes through as that US data draws a bit closer. And I think that we probably see, I think we're in a very challenging time now, right? If we start seeing signs that inflation is slowing, we might even see, an interest rate cut as early as Q1 next year. That's, if you look at historic data and the way that this has worked out in history, that generally indicates, economic contraction on the cards for the US. I mean, the US is talking a lot about, a soft landing. But if you look at history, they've always spoken about a soft landing after a interest rate hiking cycle, and they've never achieved that. So are they going to do it differently this time? Probably not. So do we expect a, sort of mild recession and or pullback in equity markets once the interest rate cutting cycle comes around? Yes, we do. So, it's kind of like a good news is bad news, but bad news is also bad news type of time in the market. So there's a lot of uncertainty, and I think that we see that playing out in the way our market traded today. Up almost 1% this morning, and now down 2/3% in the afternoon.
On the commodities front?
On the commodities front, I think most attention is still on gold. We saw gold print a new all-time high not so long ago, and it has melted all the way back down since then. So it's kind of holding at $1,987 or $1,987 per ounce at this stage, which is holding relatively stable for the day. I think if we see, slowing inflation in the US, which is the good news portion, that leads to the thinking that, okay, well, interest rate cuts are coming, which means that the economy has slowed down to the point where we might even start seeing contraction. That might put a bit of a goose pill, in the gold price. So we're actually quite big gold bulls at this point, even though we've had a bit of a flush out. We've also heard some stories and seen some news flow around central banks getting directly involved in the bullion market buying gold. So I think that there's going to be quite a strong underpin for gold in a little while. And we've seen also, Anglo American PLC that had a really, really rough day on Friday last week after their update. That continues today, down another 3.3%. So, Monday wasn't too great. Today also relatively bad. So commodities stocks are still relatively under pressure. I think, for different reasons, but in general, our feeling at this stage is that this is probably a bit of a flush out of the weak hands, if you want, and it's probably a good time to start looking into commodities, particularly something like copper, right? It's interesting to overlay, if we're going into this period where we think that we could see economic slowdown, we could see recession. If you look at historic copper prices, copper tends to bottom around the beginning of the recession period. So that generally means that when a recession begins, it's quite a good time to start buying copper, as well as copper mining businesses, right? So we're quite bullish on the sort of the industrial and precious metal side of things.
Okay. I'd just like for us to expand on the central banks buying gold. Apparently 2023 will be a record year in terms of central banks getting gold. Why is that?
Well, it's a safe haven asset, right? And I think there's also different reasons. If you look at some of who the biggest buyers were, it's essentially the BRICS nations, right? And whether or not this idea is going to materialize or not, I guess time will tell. But there's been a lot of talk about BRICS nations creating their own sort of currency that they can use to trade amongst themselves with, or trade with the rest of the world, kind of like a European Union / Euro situation, just for the BRICS nations. Obviously, these things take a long time to implement, but the general idea that's been floating around is that they want to have a commodity-backed currency. So you need gold reserves in order to do that, right? So it's a bit of a race, and we see the BRICS nations are biggest buyers of commodities, well, particularly precious metal, gold, for example. But we also see that the U.S. is now feeling like they're falling behind a little bit and up in the ante somewhat. And we don't know, what the U.S.'s motivation is, but it's very clear that the BRICS nations, China, India, Russia, their motivation is very simple. If they do go for a gold-backed currency or for a precious metal-backed currency or commodity-backed currency, oil-backed or whatever the case is, it's better to have large stockpiles of this stuff in order to underpin the value of the currency. So I think that could be some of it. It's interesting to note that even if you look at the last almost 30 years, Chinese government has been, or central bank, has been one of the biggest buyers of gold bullion consistently for all that time, right? So it's just an interesting observation. Whether or not you take that as the Chinese plan in very, very long terms ahead, and they've been accumulating an enormous amount of gold in order to have a gold-backed currency as a long-term plan for theirs, I think that's somewhat likely. But again, we don't really know until they tell us.
Until we know. Where do we stand? I mean, we're part of BRICS.
Yeah, look, I think if we do get sort of a BRICS currency, I think that changes the game a little bit. I mean, there's a few things to think about, right? Firstly, BRICS nations now control something like 80% of the world's oil production. So that whole petrodollar, US dollar being the reserve currency of the world situation, that might change. And look, I'm not saying that this is going to change tomorrow. It takes decades, right? It takes a very, very long time. But if we do some sort of a collective currency in which we start trading our resources, South Africa, for example, start trading our gold and our iron ore and those things, it's going to be tremendously good for South Africa. We will, if you think about the wealth of nations in the terms of resources in the ground, Africa is truly the richest place around, right? There is no place that has more wealth than Africa. The problem is that we have these hyperinflating currencies in really poor countries, and we're kind of forced to sell really extremely valuable goods or commodities at low prices and then buy back refined goods at higher prices. If we could get stronger currencies and demand essentially a higher local currency value for the commodities that we sell, our economies would look very, very different. So I think that we're well positioned. I think that if we do see a BRICS currency, I think it's going to be a big benefit to us in South Africa.
What is it that politicians say these days? Beneficiation. Nedbank is acquiring extra to bolster its fleet management offering. Talk us through the specs of the acquisition.
Yeah, so it's quite a small acquisition. I mean, it's a reported transaction. I think they said somewhere around 0.6 or 2.5% of Nedbank's total market capitalization is the value of the deal or the size of the acquisition that they're making. So it's not massive news. I suppose it is good news for Eqstra shareholders because they will be taken, they'll be seeing quite a good return on their stocks. But essentially what's happening is Nedbank has a fleet management business already. So it's a nice business if you think about it. I'll lend you the money to buy your trucks, and then I will provide you with fleet management services, which help you to maintain and run and operate your trucks as efficiently as possible, which lowers my risk that you're going to default on the loan to pay me back money I lent you, right? Plus, I could charge you all these value-added service fees in the process. So I think it's quite a good fit from what I've seen so far. It opens a number of new markets to Nedbank as well, which they aren't in, for example, Botswana. They've got no presence in Botswana. So they'll be getting into that. And also getting into sort of a sub-Saharan exposure in terms of the logistics management exposure. And they've got the NedFleet products. So Eqstra Fleet Management and NedFleet, they feel are very complementary to one another. You can obviously lower costs by combining and expand their service offering. And they hope, obviously, that from the fleet management business perspective, that they will, accelerate their growth. Is always kind of what, companies are looking for when they do these types of things. So it's not the world's biggest deal, but it certainly is an interesting one to see that Nedbank is, you think that the banks are just the banks, right? But there's this massive fleet management business in there as well that, is big enough to just absorb Eqstra in one fell sweep. So it's interesting to see. I think in the long term probably unlocks a little bit of value for Nedbank, but, not the world's biggest transaction, right? I mean, the entire acquisition is sort of less than 2.5% of Nedbank's value. So it's not going to move the needle and, bring in hundreds of millions of extra additional, profits from the get-go. Hopefully it's something that they can add to their portfolio and continue to grow over time.
Okay. What do we know about this? Metals processing company Jubilee Metals has secured what it describes as one of the largest copper waste rock assets in Zambia as part of its plans to produce 25,000 tons of copper annually.
Look, I'm glad to hear a little bit of good news on Jubilee. It's been some time. It's one of my favorite stocks for a very long time. And over the last, almost 3 or 4 years now, it has just been getting absolutely hammered, right? I mean, I think it peaked in 2021, just over 4 Rand a share. And since then, traded all the way down to 1.32 Rand, which is really been extremely rough, right? It's a very exciting business, though, for me at least, Jubilee is. So what they do is, they're a metals producer both in the industrial and precious metal space, but they do things a little differently. So, and it seems now that they've managed to get another deal on the table. So what they've done essentially is they've got a partner from Saudi Arabia, sorry, not Saudi Arabia, the United Arab Emirates, who is, I think, the biggest listed business in UAE. One of their subsidiaries is essentially fronting or, phoning up all the cash that they need to build the infrastructure. And what they do is they reprocess waste material. So there's a copper mine that ran, and they've created, thousands upon thousands of tons, mountains of waste product, that's already been processed. So the copper stone or the copper ore comes out, it goes through a processing facility, the copper is extracted from that, and the tailings or the waste product is then piled up on these big sort of, the Joburg mine dumps is a good example of that. Okay, that was a sludge, not necessarily it's rock, but you get the idea, the waste product. So what they do is they then reprocess that material using obviously newer technology, newer machines that they have managed to build. They've essentially nailed down this technology of how to reprocess this stuff and put it through new processes. And they are able then to extract, precious metals from it or industrial metals. So they're looking at, early stage sampling of their, of the tailings supply that they have access to is about 1.5% of it they reckon is copper, which is quite a high yield. So they estimate it's going to cost about $50 million for them to set up a plant and to completely build the plant from scratch to be able to do this. The company from Dubai is willing to, give them the money to do that, and there's obviously a profit share agreement in place. And then they go and they reprocess these tailings at a much lower cost. So they're estimating they can do around $4,000 a ton as their cost price to process all of this, and then obviously can make an enormous margin. I think it's about $9,000 a ton for copper at the moment. So they can make a huge profit margin on this, which obviously they would then split with the financier. That, gets them in line to hit their $20,000 or $25,000 ton copper production target. And a lot of this can come from this project. So it's a very exciting project, hopefully that can turn, hopefully that the research that they have to do and the stuff that they have to go, the exploration that they have to do works well, and that they could get a consistent 1.5% yield from the tailings. And if all goes well, in a year from now, their earnings might look very different to what they look today.
Alrighty. Thank you very much, Petri Redelinghuys. Have yourself a productive day ahead.